Craig Gradidge, co-founder of Gradidge-Mahura Investments, joins us now to review the performance of BEE shares in 2014, as well as an outlook for their performance this year. Well, maybe before we get into the nitty-gritty of the
what was on that auto cue.
Well, good thing that we can change it, Alec? But maybe let's pick up on Sasol, because that's certainly been on everyone's eyes and list, definitely. And it seems as though the Sol BE1 shares have also reacted, and the Inzalo share price too.
Yes, hi, Alec. It's been an eventful year for broad-based BE shares. I think the regulatory environment certainly changed quite a bit. But if we look at Sasol in particular, the oil price dominating news at the moment and markets at the moment, I see Sasol as below the discounted price that it offered shareholders the day it did the deal. So
just explain that.
So, when the deal was done, Sasol Inzalo and the entire BEE deal, Sasol was trading at over 420 Rand a share, and the shares were offered to investors at 366. Now it's at 365, 364 Rand a share.
So that's worth nil.
At the moment, yes. Not necessarily, because these deals have a term attached to them. So it's the price at the end of the period that matters the most. At the moment, there's very little value in those shares.
Craig, what about repricing? If you consider that it did happen with share options at a period of time after the crash of 97, 98, do you think that's a possibility that Sasol or other companies might reprice to give shareholders some upside?
Yeah, as I mentioned, it's the price at the end that matters. So they don't have to do anything now. And also, you've still got 3 years, particularly in terms of Sasol. So it's the price in September 2018 that matters. They have refinanced the debt. So that was one of the features of last year, was they looked at the debt structure of Inzalo, and there was a bit of restructuring on that side. Marginal benefit, but certainly cheapened the cost of debt associated with that deal.
What about the divvy? Because so often Sasol's been known to be quite a good dividend payer.
Yeah. So if you went into the discounted scheme, the one that's listed on the JSE, you got the same divvy as the ordinary shareholder. And because it's a discounted scheme, that divvy yield is quite attractive. For Sasol Inzalo, it paid its first dividend last year. And for investors that went in when the deal was done, that divvy amounted to over 10% of what they initially paid. So there has been some divvy flow. I think the biggest divvy flow has certainly been to Putumanati shareholders, where they've recovered the full cost of the investment in dividends alone.
How's the MTN Zakhele story going?
So, Zakhele was also a feature of last year. The trading platform had significant problems when they started, but they seem to have resolved that over the last festive season, and I think it was end of Jan, early Feb when they started trading, and trading has gone quite well. For the calendar year, it did in the region of about 20%. No divvy on MTN Zakhele. It's how the deal was structured, but it's subsequently given up quite a bit of those returns, and then partly due to the impact of the oil price on the Nigerian economy, where they have significant operations.
We were talking beforehand about the whole OTC and how things are changing there, the regulatory regimes. What's your take on that, or perhaps an update?
Yeah, I haven't seen any updates since I think it was September, where the FSB invited the various companies to apply for exemption. We haven't had feedback on that process as yet. I think most of them applied for exemption. Tembeka Capital used it as an opportunity to actually unwind their deal, and that happened this Monday past, where Tembeka shareholders received PSG shares, 1.7 PSG shares for every Tembeka share they held. Was it a good investment for them? It was outstanding. It was probably the best. In fact, it was the best performing of the broad-based BE shares last year. And investors, I think, did about a 600–700% return over the period since 2007 out of Tembeka. So it's been a fantastic deal for investors, and so that the change in the regulatory environment, in that instance, proved to be a catalyst for some value unlock. We'll see what happens when we get the next round of feedback.
Very quickly, what would you be going into now?
Yeah, tough one. If you're income hungry, Putumanati. I'd wait and let Sasol thing play out a bit, and maybe go into the SARB BE ones, which are the discounted ones, not the heavily funded ones, and maybe Yebo Yetu, which is also heavily funded, but the underlying investment is Vodacom South Africa, which is highly cash generative. And that combination is what worked well for Putumanati, and I think it could work well for Yebo Yetu going forward.
Great, thanks so much for that update. That was Craig Gradidge from Gradidge-Mahura Investments.